All right, guys. So I'm back here to show you how to do the luxury tax for the NBA and the Major League Baseball. So what I've done is set it up on Excel. I find Excel is the easy way to do a lot of things when it comes to uh, math problems and accounting, finance, and those types of things. So if you look at your homework and compare it to this, you'll see the numbers are the same in terms of this here. These numbers are not the same. The teams may be the same, but understand these numbers are not the same as the homework or test. So do not just copy this and paste it. This is for explanation purposes only. So first of all, I would take and put my team here and what their salary amount was, how much they spent, and then I set up things a little bit differently. So take that, and then I'm going to find out how much their salary cap taxed amount is as the next column or the next row, however you want to state that, because that's going to be the amount I'm going to work with. So, and then I would take each individual, basically copy this and paste it below, and then I will know what each one of these ranks will be, and then how much my total O would be, and you'll see what I mean by this in here in a second. So what happens with the NBA salary cap is, let's say a team is makes, let's just say that, for instance, this team has $147 million spent in salary. Okay. What we don't do is take 147 million and subtract 130,500,000 from it. We don't do that, and then times that by whatever number we want here. That's not how this works. It's not a flat tax. It's a progressive tax. So what that means is we would take this 147 million. Let's see. Let's take it over here, and we're going to break it into pieces. So what I do is I start with my different tiers, and I call it tier 1, 2, 3. So tier 1 is 0 to 10 million. So the first 10 million over the cap is taxed at 1.5%. So this is pretty easy. What I would do is equal sign, and just to do it in Excel, but if you're doing it on paper, it's 10.5 million or 10 million, sorry, times 1.5%, which would be times 0.015. That's 150,000. So this whole entire amount, if you are $10 million over the cap, you're going to owe $150,000 in cap luxury tax. Then I would figure out what this next tier amount is, and it's between 10 and 25 million. So 10 million away from 25 million minus 10 million is 15 million. So we're going to take 15 million and we're going to multiply that by the 1.75%. So again, it's 0.0175. And yes, that's what we want. That means that level is now taxed at $262,500. Okay. And then if you are between 25 and 32 million over, you're going to be in tier 3. And this amount here is $7 million. 25 million from 32 million is 7 million. So that's going to be 7 million times 0.025. That's 175,000. Now, if your cap, if you spend over $32 million, you get a flat tax of 27.3 million. Okay. So these numbers, what these represent are this tier's amount of cap is this much. Then this tier's amount of cap is this much. And this tier's amount of cap is that much. Okay. So if we just take the Clippers, they're at 137,500,000, blah, blah, blah. What I look at is what tier do they end up in? So they are, if we take the amount they spent subtract the cap from how much they spent, they are $7 million over the cap. I come over here and I look at the tier. Okay, are they 10 million over? Yes, they're less than that. So that's where they're going to be at. So what that means is I'm going to take that 7 million and I'm going to take it here. This is how much they're over, and I'm going to multiply it by the percentage, which is 105,229.12. Are they in tier 2? No. Are they in tier 3? No. And are they over the $32 million mark? No. So their total cap owed is 105,229. This one's pretty easy. We can figure that out. So we're going to go on to the next one, the Milwaukee Bucks. So what I would do now is I'll take this. Take this here. Copy it here. Obviously, format my stuff so it makes sense. It can be seen. Milwaukee Bucks. Spread this out. Okay. So Milwaukee Bucks. I'm gonna, because I'm in Excel. H8 is not what it is. It's actually going to be here. Okay. So we're going to take this amount, which is their cap number, 147 million, and the cap space is 130 million, and we're going to subtract those two. Okay. So this is what we got. This is what we know. They are now at 16.5 million over. So what I do then is I come over here and I'll look at this and say, okay, where do they land? Are they in tier 1, 2, or 3, or are they way over? Okay, they are 16 and a half. They're in tier 2, this tier right here. So what this means that we know that the first 10 million over the cap is going to be taxed at 1.5%. So that's 150,000. So we don't have any math to do. Their first cap space is $150,000. That's going to be there. Okay. Let's go ahead and put that here in a different color so we can make sure we separate them. Okay. So now we're at the 10 million mark. We said we were going to be in tier 2. So what we'll do now is we'll actually take our equals. We'll take our 10 million away from this 16. We're going to take this number minus 10 million. Which gives us this amount, 655,775. Okay. So what you do then is you're going to take that amount and multiply it by the percentage that you're in that tier, which is 1.75%. So you're going to take this amount times this number. Okay. So we can. I'm going to just do it in Excel because I know how to do this. Times the percentage, and that gives us our amount. Now, here's a checkpoint. If this number came out larger than this number, you know it's incorrect because you shouldn't be over the $15 million percentage in that amount. Okay. So again, it's not a total flat, oh, they're into this amount. That whole 16.575 is times 1.75. No. Each one part of it's broken down. Okay. Unless it's over $32 million. If it's over 32 million, it's a flat $27.3 million salary cap hit. That's luxury tax. So if this was this our fictitious number we used earlier, if they were $177 million cap, we know that their total is 162.5. Their cap hit would be $27.3 million. That's what their luxury tax would be. Okay. So again, you got to take the total cap, what they've spent, subtract it from the cap, or subtract the cap from what they've spent. Either way, use a positive, use an absolute number, a positive number. So take this number, subtract the cap from it. That'll give you a number left over. Figure out where that number fits in these four tiers. If it's in tier 1, 2, 3, or 4, whatever tier it's in, then start to do the math between. This here is the total amount. So if you're gonna land in tier 3, you already know how much it is for tier 1 and 2. You don't have to do the math for those. All you have to do then is take the 25 million from whatever your number is in this 25 to 32 range, subtract it. So if your number is 28, subtract 25 million, or 28 million, subtract 25 million from it, and do that number times the percentage. Okay. All right. Now moving on to the Major League Baseball luxury tax. So using their cap space, their cap's a flat tax. It's a lot different. It's not a progressive tax. So theirs is a little bit easier to understand. We got to just look at the way things would do. So this is an example right off the homework. It's not the same numbers. It's not the same teams. It's not the same offenses. So again, don't use this as a cheat. It's not the same for the test or the homework or anything. You got to go and actually do the work. But so what we're saying here is the Boston Red Sox spent $417,507,240. The cap for that space for that year is $233 million. They're obviously over the cap. So what we do is luxury tax. Are they going to have one? Yes, they're over the cap. Yes. How do we know? Well, let's just come over here and make this real simple. Equals their cap, their salaries minus the cap space equals that. Okay. Real easy. So again, this is the difference. There we go. And we can do that all the way down. So if you're unsure, if you didn't know, you can, if you're not good at Excel or don't know, you can take a dollar sign between a number you want to use all the time, which would be the B1. And we can go ahead and use that all the way through here. At this so that it looks correct to you guys. All right. So here's what we know. Luxury tax? No. Luxury tax? No. Luxury tax? Yes. Luxury tax? Yes. Luxury tax? Yes. Okay, great. Now we need to know how much percentage is it going to be. Is it going to be 20%, 30%, or 50%? Well, it's going to be based off their current offense. So the Red Sox have already had 2 previous offenses. So what that means is this is their 3rd offense. So we're going to take their amount times the percentage of their current offense. And this is what they're going to owe in luxury tax. What is called this tax owed. Again, these are just columns for myself. They're not part of the homework problem, but this is so I can answer the question. But I can put that right here too. So let's just do that. There. Let's get rid of this whole thing. All right. Tax owed here, we know it's going to be 0 because they don't have, they're not over the cap. They're not over the cap, so they're going to owe 0 luxury tax. The New York Mets are their 20th offense. So this will be their 29th offense. So we're going to take their current space over, and we're going to go times the 50%, and that'll be their number. Los Angeles Angels are over the cap. Yes. They've never been over the cap before. So therefore, this will be their 1st offense. And we'll do that times the 20%. And then again, we have the Cubs. Have they been over the cap? Are they over? Yes. By how much? Times, this is 29th offense, so times 50%. Sorry. Times 50%. And there we go. So there's how you do that. So subtract the cap from what they've spent. And if they're over the cap, look at what their previous offenses were. So this was, if the Royals had been over, this would be their second offense. They would have paid 30%. So when the Royals go over again, it'll be their second offense. If the Red Sox, they're now at their third offense. So from now on, the Red Sox will always pay 50%. The Braves, the Mets, the Cubs will always pay 50%. The Angels just got their first offense. So their next one will be now at 30%. Okay. So that's how that works. It's different than the NBA. And I hope this helps you guys out with figuring out the two taxation things on the luxury tax of the NBA and Major League Baseball. If you have any questions, hit me up, text me, email me, but use this video as much as possible to go through and set it up. Again, you can use Excel to do the work and then just answer the questions on Blackboard pretty easily. So, all right, have a great day.